Hi, my name is Diego Mendez. I'm a bankruptcy, loan modification, and foreclosure lawyer here in Miami, Florida. I've been doing this kind of law for about 13 years. I was around in 2008 for the last crash, and I'm seeing a lot of the same things that I saw then repeating themselves now that we're entering the phase where people are coming out of forbearance and they're not really sure what to do. A lot of people are being offered loan modifications. They're being offered things they do not understand. I'm going to talk to you today about what I'm calling the roadmap for the end of forbearance for people with FHA mortgages, Fannie Mae and Freddie Mac. These folks have a very specific thing that they can do with their mortgages that a lot of other people cannot do. They're also the majority of the people in the United States have these loans. So we're going to talk about this in a couple minutes. Now, before we get there, however, I need you to please like this video and subscribe to my channel, Debt Law Survival Guide for the Desperate Debtor. So I keep making these videos. It's very important. So these videos come up in people's searches, and I keep making these videos and helping people either through comments or direct contact with folks. So please like and subscribe my channel, and I will be back in about 5 seconds. So you're coming to the end of the forbearance and you're getting letters in the mail or calls, and they're offering you different things. The one thing that most people are getting, especially if you have an FHA loan, is an offer for a partial claim. Now, a partial claim, we've talked about this in a lot of different videos, but the partial claim basically is putting the entire amount that you owe in your forbearance at the end of your mortgage so that you don't have to pay it in a lump sum. Now, in order to qualify for a partial claim, there's two things that need to happen. Number one, you need to be owner occupied. That means you have to live in the property. It cannot be a rental property. And more importantly, you have to indicate to the bank that you are able to pay your original loan payment, your original mortgage payment, the way it existed before the forbearance. If you do not tell them that, then they will deny your initial request for a partial claim because they're going to tell you you cannot afford the home. So what happens in a situation where you actually cannot afford the home and you tell the bank, well, listen, I can't do this. I can't pay this mortgage the way it is because I lost my job during COVID and I had different situations. My spouse lost her job, or God forbid, there was a sickness or a death. Now, what the bank will do in that situation is they will offer you what's called a owner-occupied loan modification. An owner-occupied loan modification is basically what they'll do is they'll take all the money that you owe during the forbearance, roll it into one big new mortgage. They can extend it up to 30 years if you want. You don't have to. You can actually request for it to be less, but you might not be able to afford it if they don't extend it to 30 years. And they give you the current interest rate, which is right now about 3.07%. Whatever the interest rate at the time when you apply for this loan modification is the interest rate that they'll give you. Now, this means that the payment has to go down. The payment cannot go up. If the payment goes up, then obviously they're not giving you this type of loan modification. So if you are unable to pay your mortgage at the beginning when you request the partial claim, this would be the next step. Now, what happens if you can't pay this? Because what would happen is they would automatically give you this payment. There's no documentation. There's nothing requested. This is basically based on what's owed and the value of the property and that sort of thing. Now, if you cannot pay this loan modification, then what they'll do is called a combination loan modification partial claim. Now, the difference between this and what we just talked about is that in this situation, the bank will do a partial claim. So they'll take whatever you owe over the last 18 months or however many months you were in forbearance. They'll put it to the side. It's basically a lien at the end, and then they'll modify only what you owe before then. So this is a smaller amount than the first step. So this would basically make it easier to modify the loan. Now, it's the same thing. It's 30 years with a 3%, a little over 3% interest rate, or whatever the percentage rate is at the time. And in this situation, the payment can actually go up, which is a little different. Now, why would anybody need this? Why would they say, well, because sometimes if they can't, when I say the payment go up, it might go up by a few dollars. But again, this is a better situation than losing your home. If maybe in the time period that you applied, you got a better job or something happened, and you get this offer and you look at the payment and say, okay, well, at least, I still can do, I can afford this loan modification with a partial claim, then you would accept it and then you would move on because you would be able to afford it. The next thing that they would do, if you cannot afford this step, which is the most drastic and the most intense of all the different things, which is basically a partial claim plus loan modification with limited documentation. Now, this is a long-winded thing, a long-winded way of saying what they do is they max out the 30%, they max out the partial claim, they go for the loan modification at the lower interest rate of 3%, and they will also defer, which means they'll take something from the principal that you owe and put it at the end with the partial claim. So they will basically lower the amount that the mortgage interest payments are based on. This is a way to lower the payment. This is a way to make the house more affordable. This is the maximum form of loan modification. Now, you don't get here unless you cannot qualify for the other three. If you do not qualify for partial claim, if you do not qualify for the owner-occupied loan modification, and if you do not qualify for the combination partial claim loan modification, then at that point they'll look at this. This is the last resort. Now, if you don't qualify for this, then you basically do not qualify for anything, and the bank will probably foreclose on you. So hopefully you can at least get to this last stage and you do qualify for something that the bank can give you and you can afford the payment. Now, the difference between what's going on now and what happened in 2008, in 2008 there was a complicated form of loan modification applications. You had to submit a lot of documentation, you had to do a lot of different things. Actually, I forgot to tell you one thing. In this very last stage here, they do request, and this is important to understand, they do request that you provide income information, which is different than every other type of loan modification that they're offering now. Right now, they're offering something called streamlined loan modifications, which do not require any kind of income verification. But if you get to this last stage, which is basically the very lowest possible payment that could ever exist, the very, very low payment, they do require that you show that your income is actually lower. But the streamlined modifications, which is which is the owner-occupied loan modification, which is the combination partial claim loan modification, those are called streamlined modifications. Streamlined modifications do not require any documentation. However, because they're not based on your income, because they don't ask for any income verification, the payment might not go down. It might go up in some situations, and it's not always, it's basically an imperfect way of giving somebody a loan modification who cannot afford it. So it's a different combination of things that are being offered. I understand it's very complex. The biggest difference, however, is I started to explain, in 2008, you had to go out and apply for these things. And nowadays, there is actually, this is all automatic almost. All you have to do is tell your bank that you cannot afford the current mortgage payment. However, be very careful when you trigger this, because as you see, if you can actually afford that payment at the beginning and you tell the bank that you can't, you start going down the steps. And yes, there is this lure of trying to get a lower interest rate by keep telling the bank, no, I can't afford it, I can't afford it. But at the very end, you're going to have to prove it. And if you can't prove, if you're going to show your income and your income actually is significant enough to pay the original mortgage payment, they're going to deny you. And we're not sure what that means. We're not sure if they're actually going to be able, if at the end when they deny you, they say no, you can. They might not offer you anything at that point. There's actually no guidance on that I've been able to find. So be very careful in trying to manipulate the system and asking for a loan modification, the bare bones loan modification, if you can actually afford your home. This is not an opportunity like a refinance to go after a lower payment. This is only for people who literally cannot afford their homes and are in a situation where this is it. If they don't take the loan modification, they lose their homes. So again, be very careful. I understand this is very complex, but it is, you can understand it, and the bank will basically do all the work for you. They're not going to give you very many options. They're just going to run you through the steps, and at the end, hopefully one of the four options is something that you can afford, and you accept it, and you can keep your home. So that's it for now. Again, my name is Diego Mendez. I'm a bankruptcy loan modification and foreclosure lawyer here in Miami, Florida. Again, I've been doing this stuff for a very long time. I represent a lot of people. So I spent a lot of time reading about this, speaking to people, speaking to my colleagues, going to court on these issues, and hearing all the different options and different things that are being developed. I pay attention to the news. I pay attention to what the different organizations that are involved in this type of decision making to create these rules. And I try to bring this latest information through the lens of an attorney to you. So again, please like my videos and subscribe so I keep making these videos and I keep trying to help out everybody who's in a situation where they can't pay their bills. Thank you very much.